In today's video, we're going to talk about where XRP is likely heading over the next few days, what the charts are really telling us right now, and how global market conditions could influence the next move. If you're holding XRP or actively watching this price action, this is one of those moments where patience matters more than hype. Right now, XRP is trading around the mid-140 range. Just a short time ago, this coin was comfortably above $2, and that sudden drop caught a lot of investors off guard. When moves like that happen, the most important question isn't whether the price fell, but whether the market has finished reacting to that fall, or if there's still unfinished business to the downside. Let's start with the current structure of the chart. XRP is sitting on a very important price zone around 143. This level is acting as a short-term support, and over the past several sessions, price action has slowed down noticeably around this area. That slowdown is important because it tells us the panic phase is likely over. When markets are truly panicking, prices don't pause. They drop fast and they drop hard. What we're seeing now is hesitation, and hesitation usually means the market is trying to decide what comes next. If we look at momentum indicators like RSI, the story becomes even clearer. Earlier this week, RSI dropped deep into oversold territory, down into the high 20s. That's not normal selling pressure. That's emotional selling. It usually happens when traders rush to exit positions all at once. But now, RSI has recovered into the mid-40s, which suggests that selling pressure has cooled and the market is transitioning into a consolidation phase rather than continuing a straight free fall. This matches what we're seeing in the Bollinger Bands as well. XRP collapsed from above 2.30 and slammed into the lower band. But since then, price has stabilized closer to the middle of the range. That typically signals that volatility is compressing. Markets don't stay quiet forever, and when volatility contracts like this, it often precedes the next directional move. Volume tells the same story. During the sharp drop, volume spiked as fear took over. But now, volume is fading. That means fewer people are rushing to sell at market prices. Instead, traders are waiting, watching, and reacting more cautiously. This environment usually leads to sideways price action before the next breakout or breakdown. So what does this mean for the next few days? The most likely scenario is consolidation. XRP is probably going to trade in a range between roughly 140 and 150 in the short term. As long as price holds above the 143 area, the market is effectively building a base. In that case, we could see a small relief rally toward 153. That level is important because it was previous support and has now turned into resistance. Markets love to test those zones. If XRP approaches 153, expect hesitation. That doesn't mean rejection is guaranteed, but it does mean buyers will need real conviction to push higher. A clean break above 153 with strong volume could open the door for a quick move toward the 160 to 162 area. However, at this moment, that bullish breakout scenario still requires confirmation. Now let's talk about the downside risk, because ignoring it would be a mistake. If XRP fails to hold above 140 and sellers regain control, the next level the market is likely to test is around 131. That zone lines up with the recent swing low and represents the next major area where buyers previously stepped in. A move down there wouldn't automatically mean the trend is broken, but it would signal that the market needs more time to stabilize. Context matters here, and this is where global factors come into play. Right now, financial markets around the world are extremely sensitive to macroeconomic data. Interest rate expectations, inflation numbers, and U.S. employment data continue to influence risk assets, including cryptocurrencies. When traditional markets get nervous, altcoins like XRP tend to feel it more than Bitcoin. On top of that, there's still uncertainty around global liquidity. Central banks are walking a fine line, and investors are quick to reduce exposure when risk sentiment shifts even slightly. That environment makes explosive upside moves harder to sustain in the short term. Another factor that always shadows XRP is regulation. XRP is one of the few major cryptocurrencies that reacts strongly to legal and regulatory headlines. Any positive development related to institutional adoption, regulatory clarity, or cross-border payment use cases can act as a sudden catalyst. At the same time, negative or unclear regulatory news can quickly pressure price, even if the chart looks stable. So when you combine technical structure with the broader global backdrop, the message is fairly clear. XRP is not in a strong trending phase right now. It's in a decision-making phase. The market has already made its emotional move, and now it's waiting for a reason to commit in one direction or the other. For the next few days, the 143 level is the line in the sand. Holding above it keeps the door open for a short-term rebound. Losing it increases the probability of another dip toward the low $1.30s. This isn't a time for aggressive chasing. It's a time for observation. Markets often reward patience far more than prediction. The traders who survive long-term aren't the ones who guess every move correctly, but the ones who wait for confirmation and manage risk when the market is uncertain. So if you're watching XRP right now, focus less on what you hope will happen and more on what the price is actually doing. Let the chart speak, let volume confirm the story, and remember that consolidation phases often feel boring right before the next big move. If you found this breakdown helpful, make sure to like the video, subscribe for more market analysis, and let me know in the comments where you think XRP is heading next. In the next video, we'll zoom out and look at the bigger picture to understand what XRP needs to do to regain long-term bullish momentum.